I hope everybody is watching the news and the current development of the US-China trade, cyber war, and the economical attacks from both sides. So we've got two powers. We've got China and we've got the USA, whom are global powers right now. And China is accelerating very fast in economical growth, in the strength of the currency, of their currency, and now that they've got the digital yuan out right now as well. So China is really growing fast, and they want to stabilize their power. So as they grow, they want to stabilize what they've grown into, what they have built for themselves, what they're achieving and what they're about to achieve. Nothing wrong with that. It's all fine. And then we've got the USA, whom are feeling threatened by China, by the economy, by the growth of China. Not threatened, but they feel the competition is really on. You know, for the last 20, 30 years, America hasn't had real competition. China popped out of nowhere for the last 30 years and then grew exponentially. And the United States have spread itself thin, and now it's retreating all the business back, all the funds that are spread out internationally, they're pulling it back into the country to try and stop the leak. In a summary. So the summary is essentially we've got the USA as a global power that is essentially threatened by China, and we've got a political currency war going on. The more debt America adds, 1 trillion, 2 trillion, all of that makes the dollar weaker. Everything that gets printed out like that will make the currency weaker. A government can say, okay, we've got a crisis on our hands. We've got the coronavirus crisis, businesses are failing, people are not working, they cannot work, we're in lockdown. We need to print money. Print money. Money's printed. Let's give this money out to businesses. Business A, business B, business C. Let's pay some wages. And let's help everybody out in the USA. So America added in a few months $1 to $2 trillion of debt. Okay. Now, China, for example, benefits economically from the US dollar becoming weaker. So as we all know, the US dollar is the global currency, the currency of trade, the currency of oil, and China wants or benefits from the US dollar getting weaker. Again, nothing wrong with that. There's one economy that wants to benefit from this or that, and there's another economy that wants to defend and grow through this or that way. Anyways, for us, for the crypto community, all we have to do is watch and see how this unfolds and see how the economy will react to all this debt, to the US dollar inflating. Trillions are getting printed out and rerouted back to the market. The stocks are not really reflecting what is going on in the real world. Tesla stock is shooting up. Amazon, all these companies shooting up. People out there with no jobs. Business is still shut down. Business is completely shut down in administration. So there's different points of view, different realities again, trillions printed out, invested back, or pushed back into the market, with consequences, obviously. Cryptocurrency in specifically this type of condition. So these are the type of conditions that the let's say Bitcoin was born from, was created to hedge. So Bitcoin is a hedge against this economy, against political currency wars, currency inflation. The Bitcoin is a hedge against political wars, against all these inflated, fake valuations of businesses, of stock. So after the halving, Bitcoin, there were two parties essentially. Party A would say, okay, so after the Bitcoin halving, we would see Bitcoin essentially crash to 9,500, 9,000, and then hover around 7,000, 6,000 again. We'll see a little dip, maybe interest is lost, they sold the news, and there'll be a mass sell-off. And there's party B who said, okay, you know what, we think that after the halving, Bitcoin will shoot up to 12,000, 13,000, maybe 15,000. Ideally to 18,000 to support the mining operations of the small to medium miners. The big miners are not affected. They're mining regardless of what the price is. So what's happening now is that the Bitcoin price is stabilizing at 9,000. It's hovering between 9,200, 9,000, 9,100, 9,000. A few weeks ago, it was between 9,800 to 500, and now 300 to 500, etc. So there's a little range, but the main range that Bitcoin is trading at is 9,000, and it's essentially what I believe the calm before the storm. I think what we're going to see is Bitcoin being a major hedge for what's to come. These currencies, they're going to slowly inflate, day by day, minute by minute. It's slowly inflating, and all these effects will cascade into a major fake evaluation of everything. When the balloon is this pumped, it just takes a little tiny pin. It becomes more sensitive. So as it grows, it becomes more sensitive to a massive crash. So this is essentially wave one of what we've seen, of what happens. Everything else can crash. Governments can say, okay, the Fed can say, okay, let's print $1 trillion. Let's do this, let's do that with a currency. You can't do that with Bitcoin. You cannot. Every 10 minutes, this is what you get. And whoever gets it can sell it for a certain price. As the dollar gets weaker, it becomes more valuable. The price of the Bitcoin doesn't increase. It's the weakening of the dollar. It's what makes the Bitcoin more valuable. The weakening of currencies. Look at Venezuela, look at other countries, Argentina, how much the Bitcoin is in Argentina, etc. So essentially, we're going towards the ideal scenario for Bitcoin, where the only true hedge is cryptocurrency, stable, strong cryptocurrency, such as Bitcoin, Monero. There are other cryptocurrencies that I can mention, but we'll keep it neutral. Just say Bitcoin. If you want privacy, Monero. There's all the smart contract platforms. So in the next few months, you're going to start seeing these currencies being affected through politics and trade wars, and it might get worse. And if it gets worse, get ready to keep your cryptocurrency safe and make sure you're strapped in, and not think, oh, you know, I'm waiting for it to go to 6,000 or 7,000 to buy my 0.1 Bitcoin or 0.01 Bitcoin. I thought it was too expensive at 9,000. You know, you never know what's going to happen. It's usually around this time where it hits August, September, October, and then you start seeing some activity with Bitcoin, and then Bitcoin probably will go to 12,000 and maybe 15,000. It can only go up. You know, the dollar is getting printed at such an insane rate. This is the time to watch the market, and you know, if you're not sure, it's always best to the best way to get the best price of Bitcoin. You know, if you say it's 9,000 right now, you're like, oh, I want it to drop to 8,000. Just, you know, and you have $100 to invest. Why don't you just invest $20 at 9,000 every week? Put in $20. Put in, say you've got a monthly budget, divide that by 4 and just do a weekly purchase. Because you never know, you're never going to get the best price that you want. So it's better off to get, you know, 20% of this, 20% of that. 9,000, 8,600, 8,700. Average in between those. Better than going all in at 9,000 and then it dropped to 8,500. So I'll definitely follow up with other videos that will slowly monitor and reflect what is going on with the major currencies and the cryptocurrencies that we're invested in. So keep an eye out, and if you guys have any other information about this type of stuff, if you're interested, just drop a comment, and I'll see you guys soon.